Process costing, flow of manufacturing costs. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, St. Louis Test Prep, the website, and the book, Cost Accounting for Dummies, that you can find on Amazon.com. This is a spreadsheet that I've used to explain the flow of manufacturing costs through the T accounts that you find in process costing. Now, I want to distinguish between what you're going to see, process costing, and job costing, which is a different topic. So I make the point here that all these T accounts that you see on the page are part of inventory, but that the control accounts, for example, you see direct labor control here, are temporary accounts that don't make it into the financial statements. They are temporary parking places. So if you can imagine, we spend some money on labor costs. So we debit an account called labor control, and we credit an account for cash for $150,000 for spending on labor. We also buy some materials. We have a beginning balance of materials on the shelf at the beginning of the period. We make some purchases, $47,230. So we've now bought some materials. So we have a labor control account for labor, a materials control account for materials. We also have spending on overhead. And if you go off to the side here where I have my notes, you'll see that there's two accounts for manufacturing overhead. So let's say we write checks for a certain amount of overhead. Maybe it's a salary for a security guard at our plant. His cost, his salary is indirect. We can't directly assign it to product. So it's an indirect cost that we're going to apply. So we debit an account $170,000 to reflect spending on that indirect cost, the security guard's salary. The next step is that when we apply cost to production, they debit an account called work in process, which again is another account that's part of inventory. And work in process is defined as partially completed goods. So $141,250, we have labor costs that go into production. We have material costs, $38,750, that go into production. Overhead's a little more complicated because we actually have a separate account. We had a manufacturing overhead control account for the actual spending, the checks we wrote, $170,000. We now apply or use in production $160,000, and that it goes into a debit for overhead and work in process. The way that we apply that overhead is based on some overhead rate that we calculate separately. So what you have in work in process might be a beginning balance. We have labor costs go in, overhead costs $160 debit, material $38,750 debit. The next step is when we complete a good is that costs move out of work in process with a credit, as you see in blue, and they go into finished goods in blue, which are goods that are complete, waiting to be sold. So in this example, we credit to reduce work in process by $376,600. We debit to increase finished goods $376,600. Just as before, we can have a beginning balance in finished goods. We can have an ending balance in finished goods. When we sell goods to someone, they go out of the finished goods account, and now they're no longer an asset. This $378,500 goes out to an account called cost of sales, which is an expense that we match up with the revenue that we get from the product. So if we sold the product for $30, we might have cost of sales and expense $25. So that is the point where the cost goes out of an asset account inventory and into an expense account. You see another formula down here, which is the basic formula for this flow, which is we have a beginning balance of finished goods. We then have cost of goods manufactured, which was the debit that we got from work in process, also a credit to work in process. We add that all up and we get a number called goods available for sale, 403,500. And the goods available for sale, the goods that are finished, can go one of two places. Either we sell them, that was the 378,500, and if we don't sell them, the amount left, 25,000 in this case, is the ending balance of finished goods. This was a problem where a student had to plug in and find out the beginning balance of finished goods after being given all of this data. Now, what if we don't apply costs correctly? That is, what if our actual costs were more or less than what we applied? I'm trying to fix this increasing right here. That should be an I. Well, normally when we close factory overhead, the easiest way to handle it is to adjust cost of sales. So for example, if we allocated $160,000 in overhead, which is what we saw over here, we applied or allocated $160,000. We spent $170,000, so we're going to close this account. That should have a 0, by the way. We close the control account by crediting. We close the allocation account up here because we applied it as a credit. We're going to close it with a debit. We write checks. We have a debit and overhead control. We close it by crediting, and the difference to make it balance, the $10,000, is a debit or an increase to cost of sales, which means that the checks we wrote, 170, were more than what we allocated to work in process by $10,000, so we're expensing another $10,000. And finally, keep in mind that there's two entries when we sell something. There's the cost of sales debit, 378,500, which you saw up here and also in the T accounts. There's your 378,500. So we debit cost of sales to have an expense, and we credit inventory to reduce an asset account for the items that we sold. On the other hand, we had a sale, so we get cash in the door, hopefully for some higher amount than cost of sales, and we credit an account called revenue or sales, in this case, 542,400. So when you sell something, there are a pair of entries. There is the entry to recognize cost of sales and reduce or credit inventory. There's a second entry to debit or increase cash and recognize sales or revenue. That's as far as we're going to get on process costing. If you go to the website, keep in mind that we have our toughest accounting topics, upcoming live chats. Here are some of the courses that we have. These dates are always being updated, and the courses in blue we always teach in a small group setting. And also keep in mind, I got a lot of interest in the book, Cost Accounting for Dummies. Here is a picture of the cover, Cost Accounting for Dummies, which you can find on Amazon.com. Thanks a lot for watching, and we'll see you next time.